Peter, this argument and this discussion about whether it will make the ECB more likely to move or not, this has really been occupying us for the last couple trading days. Which camp are you in? Do you think that the ECB will embark on rather aggressive easing as a result of this drop in inflation?
Well, first of all, falling oil prices are a good thing. They're good for the European economy. The only problem is the low prices aren't going to last. I think it's temporary. But the idea that Europe needs inflation is complete, utter nonsense. Economies benefit from falling prices. I mean, imagine if oil were free. I mean, what if Europeans could have all the oil they wanted and it didn't cost anything? I mean, wouldn't that be fantastic?
So are you saying that the drop in oil, that's really just temporary? We are going to see a stabilization at a slightly higher level, and that means the ECB won't be doing anything?
Well, I think the drop is temporary because I think people are still factoring in a stronger U.S. dollar because they think the Fed is out of the QE business and they think the Fed is going to be raising rates in 2015. I think the Fed is going to be launching a much bigger quantitative easing program than Europe and Japan combined. So I think when all the money printing returns in the United States, you're going to see a big increase in oil prices for everybody. But the idea that deflation or low inflation is a problem, again, is wrong. I mean, if the cost of food goes down, that's a good thing. If the cost of health care goes down, that's a good thing. As the cost of living goes down, the people benefit. It's just government that wants inflation because politicians don't want to cut government spending. They don't want to deal with all the deficits they ran up to buy votes. So they want to bail themselves out by creating inflation. But the people will suffer from the inflation the central banks are creating.